Happy Sunday, everybody. I had some fantastic questions come in this weekend, and I figured it might just be easier if I made relatively short video and kind of walk through this because repetition is good for everything. And sometimes you need to hear stuff 4 or 5 times before it's really going to resonate. And so if you're doing great setting up your chart and fully understand the process, then you don't even need to watch this. But if you want to, sit through it, and I'm going to try and walk through this is Sunday, so the market's closed. So it's a perfect time for me to go in and set up my chart for tomorrow. That way in the morning, I don't have a bunch of extra stuff to do. I really only have 1 or 2 things I need to do, and I can be ready for it. So here's our data for the MES on Sunday. We'll do the Dow in just a second. Tomorrow, we're expecting a volatility factor of 10.5 points. That means we're expecting 10.5 points of noise in the market. Okay, so that should throw up a little flag for you. At least for me, it does. And the reason is that I've been trading the ES for years and years and years. And when I was starting to trade as a younger guy, we would have 10 to 12 point ranges for the entire day. And now we're talking about 10.5 points of noise. And, last week it was up in the 15 range. So you kind of have to think about that in terms of, there's a lot going on in the world and the market's really volatile. So we have global events going on. We have oil chaos going on. We have a war going on. There's a lot that's happening. And, this is kind of a warning to somebody who is a brand new trader or not really, in tune with trying to size off of the expected volatility. This is how people get blown out. You can have some system that you back tested even, and you have a bunch of data on it, but all of the data is referencing small ranges or much less volatile days or whatever, and suddenly that doesn't work. And that's why it's important to have the market dictating your stop, not some form-fitted number, right? Not something that, I really only want to risk 2 points or whatever it is. This is a way of looking at it and saying, okay, if I want to play around in this pool, I better know how to swim. And I better know how to swim really well because that's an awful lot to be risking. It's the other reason that we're trading micros, because $52 worth of risk instead of 525 is a huge difference, right? Anyway, tomorrow we have an expectation of a wider range day. It should be a big day. Okay, how much are we sure of that number? 75%. That's a really good number. Anything over 70 tells us we can be pretty confident in it. And then how much wider are we talking? Like anything could be a wide range. Well, we're talking about a range wider than 43, 44 points. Okay, well, we've got some projections that match up with that. So on the small side, if we really don't have a big day, we should see at least 63.5 points. But anytime we're looking at a wider range, we're always looking to the middle. Okay, so this could be something that we look at as a potential reversal level, but ideally for the day, we're looking for a 90.5 point range. And then if we have a total blowout, if I don't know, a politician goes on the air and says something stupid, or if we drop a bomb on something, or somebody blows up one of our ships or whatever it is, we're looking at an outlier. And an outlier could be as much as 140 points, maybe even more than that. And it's the purpose of this is to give us some baseline expectation of what to expect for the day. So by doing this afternoon and knowing that I'm really not going to know what's happening until tomorrow morning when I come in and do pre-market, but now I at least have an expectation. Okay, tomorrow we're looking for a wider day, and it could be a big one. And so I want to take advantage of that. And when we look at the YM, it's even bigger than this. It looks like a massive day. So that's just sort of your starting point. And so then we're going to take a bunch of data and we're going to throw it onto the chart, a bunch of static numbers, because there's nothing we can do right now that's dynamic because the market's not open. So in very simple terms, we've got an all-time high. We have a 3-day high that also happens to be the previous day's high. And we've got a previous day's low, and we've got a 3-day low, and we've got a bid and offer zone. So that didn't work out well. We've got a bid and offer zone that we can plug in and we can put on our chart, and we can see the general structure of the chart without doing anything else. Okay? That is very, very helpful when you're learning to do this, to just do the work. I know everybody wants everything automated, and wow, what a pain in the ass that I actually have to double click on a line and move it to another number. But it's helpful. And I'm going to tell you that no matter how much you want everything done for you, if you will sit down and do the work, this is going to be infinitely better for you because you're actually seeing the market structure. It's not just something drawn on the chart. So let's take a look at what this looks like for tomorrow. Okay, so I've added the offer zone. I have added the bid zone. I have marked off yesterday's or Friday's low. This is actually going to be the current day's high and low, so we'll just move that down here for a minute. I have marked off this is the 3-day high and the previous day's high. I have marked off the all-time high way up here. Please just ignore the green lines. I'll explain them in a minute. And then the 3-day low is way down here. So I have my reference prices. Those are all static. They're not going to change. So I can do them in the evening. I can do them in the morning. If I need to move lines around, it's very simple. Once I have them on the chart, let's just, for the sake of discussion, let's just say that I come in and the current high is 68.74. So I would double click on this and put in 68.74, and it's going to move that line for me. Okay. And then let's just say that the current day's low is down at 68.54. Okay, so one time in the morning when I come in and do pre-market, I'm going to make an adjustment to that because everything else is done for me automatically. And then if I really want to learn how to do this, if I really want to engage the work process, I'm going to come over to my trading plan and I'm going to put in those same numbers. So I'm going to put in, let me move this over so I can see what I did, 68.74, and I'm going to put in 68.54. And I'm going to hit enter. Okay, so what this is going to do is it's going to populate the rest of the data for me, the stuff that basically will be dynamic when I'm using the indicator. But I want you to do the work. I want you to engage with this, and I want you to do it one time, and that's when you actually sit down to prepare yourself for the morning analysis. Okay, I'm happen to be doing this at night. I wouldn't even mess with these numbers because it wouldn't make any sense because there is no range. But if this were the range, if we came in and this was the range, it's now telling me important stuff. So I know that I'm probably looking for a 90.5 point range, but I need to be aware of where the smaller one is as well, because that could be a morning reversal. So I just want to pay attention to that. Okay, well, it's telling me that I have 43 points to go if all we do is get to RP1. Okay, well, 43 points is what we could get out of this, and that's only if we bought it like at the high and carried it up or at the low and carried it down. And I know that my risk is going to be 10 points. Okay, well, it doesn't take a genius to figure out that I have at least a 4-to-1 return on that. And then if I'm looking at the one below, 70 points, okay, well, I have a 7-to-1 potential return on this. So without even looking at the chart, I can look at this and say, wow, okay, if I can figure out how to trade with the trend, the entry doesn't matter right now. Forget that all out of your head. There's only 5 places you're going to enter on the chart, and that's the easiest part of it. The hardest part is doing the actual work so that when you start trading, you already have a plan. You already know what to do. If it's moving up, you know what you're going to do if you're going long. You know what you're going to do if you're going short. Rest of it's really easy. We have to be able to build out this plan. So by knowing how much range has been used up. So in this case, with the current range of 20 points that I'm just totally making up, that's what it is in the morning, I know that only 30% of the range has been absorbed. I have 43 points to go. So I have at least a 4-to-1 if I can get myself positioned. It's probably quite a bit more than that because I'm almost never going to be buying out of the high or selling out of the low. I have 70 points to go. Minimum. Expectation is minimum that I have 70 more points to go. So that to me is extraordinarily useful without even looking at a chart. So now I can come over and I can look at the chart and I can go, okay, well, we've got a high up here and a low down here, and they're already in the bid and offer zone. Let me add the range projections. Now I went ahead and just put on range projections. I just made them up. Okay. So this is before. So when I was making the training, I didn't have an indicator that drew them for me. I was constantly having to update where those range projections fell because each one of them is generated from the current low or the current high. So let's just, as an example, let's say that in the overnight, the market low moved down here to 54. Okay, well, whatever I have projected up from the low, this would move down that same number of points automatically. This would move down that same number of points automatically. So when I come in the morning and I put on the range projection, it won't do anything right now because there isn't a range. It'll just look retarded because it'll be from Friday's high and low. It won't make any sense. But when it opens tonight, it'll start calculating and it'll start moving everything around. So it could be that what we do is we trade way up into the offer zone. Well, now it could be that my range projection falls into the bid zone instead of way down here, right? We have to be able to take the current range and put it against it. So this is a one-time drill. This is one time to get you tuned into the market structure. You're going to put everything in and you're going to look at it and you're going to say, before I even look at the chart, what can I get out of this? Okay, well, I have a long way to go. We've only used 20% of the range. Gosh, I want to be able to capitalize on. This is a risk on kind of day. Now I just have to figure out whether that's long or short, right? And it may take me 2 trades to figure that out, but at a 8 or 10 or 12 to 1 return, it doesn't matter. It doesn't matter. It's okay to lose $50 here and there. It's not okay to lose 525, but it's okay to lose $50 trying to get positioned. And that's the attitude that you need to have. That's why the entry, it doesn't matter near as much as you think it does. It's about how you are positioning your risk and using the market noise in your favor. So somebody had specifically asked me about this. My suggestion is that for the first 2 weeks, at least once a day, you come in and put in the actual values here because it's going to be really helpful for you. If over time you find that to be obnoxious and a waste of time, don't do it. That's fine. Just put the projections on your chart and see where they fall, and hopefully your trading plan works out as well. I prefer making you do the dirty work because it's going to pay off in the long run. I think it's really important. So I think that covers the ES. We have a great opportunity tomorrow. It's just going to depend on what actually happens in between now and when we sit down to trade. And that could be at 1 o'clock in the morning because you're in London or you're trading the London session. That could be at 7:30. That could be at 7:45. That could be at 7:50. So there's no way for me to do this work for you because I won't know what the range is when you sit down. So it's critical that you set aside the time, 5-10 minutes in the morning, to do the work, because now it's your trading plan. It's not anybody else's. It's your trading plan. And the entries, like I said, are almost ridiculously dumb. You're trading off of 4-5 lines. Right? That's how you're opening a position. If you're going long, you're buying off of the SD1 or you're buying off of the SD2 negatives. And if you're going short, you're selling off of the 1 or the 2. Every now and then you might buy or sell off of the VWAP. That's it. That's how you open positions. Then you're just using the volume trend to manage them and to add. Okay, and you're adding out a profit. So let's look at the YM. It looks like an equally awesome day to be involved. We have a VF of 80. I think I've got everything on the chart. We can fit all this. Yeah. VF of 80, so $40 a contract, 83% chance that we have a wider range than 447 points. Our projections are 544, 705, and 988. And again, I've just plotted out the basics. So I've got the 3-day high, I've got the previous day's high, I've got the all-time high way up above, I've got some liquidity zones that fall on here. I've got the bid and the offer zone. All I had to do was double click on them and move them around. It's pretty easy, pretty simple stuff. So I've got my chart set up, and then the next thing I'm going to do is I'm going to add the range projections when the time is right. Then I can sit down and I can say, okay, what is left of the range? Does that mean I want to be a trend trader or a mean reversion trader? Do I want to fade the edges or do I want to trade with the trend? And then I'm going to say, do I want to do that long? If I go long, how much can I expect to get out of this? If I go short, how much can I expect to get out of this? How does that compare to what I'm risking for the day? Now, if I do those steps, I am so far ahead of any day trader out there. Maybe not any, but let's call it 95%. I have a complete and total strategy for how I'm going to approach the market. All I have to do is execute it. I don't have to react to the market moving up and down. I don't have to react to indicators. I don't have to worry about 2 little lines crossing over. I know what I need to do. It may take me a minute to get positioned, but I know what I need to do. Or the alternative is I know that I should not trade today. I should just go play golf or whatever it is that you love to do. Because if there isn't enough range, you're now risk off. It doesn't make any sense for you to be risking capital. Now you can have unique situations where it makes sense to do that. And that's what the training's about. That's why there's 20 sessions in there, because I need you to see the nuances. I need you to see what happens when I wake up and the range is like already complete. Okay, well, I don't really want to trade, but here's what you can look for. These are the things that you can do. Or there might be a day where we've only moved directionally one direction. The VWAP's totally untested. The only trade on the chart is to buy the VWAP. The only one. You have to experience those. That's why there's 20 trading sessions. It also gives you time to get used to this. As I said, it's about 2 weeks of work to where you really have this down. And at night, you can go to bed and go, hey, I'm excited to wake up tomorrow. There's an 83% chance that we're going to have a big ass day. Now, when you sit down, it may be that that's already blown out, or there's only 5 points left in the range. I can't do anything about that. So I don't know how you're going to feel the next morning, but I can tell you the night before whether or not you've got opportunity tomorrow. And I think that's a huge, huge step in the right direction, because it takes your focus off of where is the trade, and it puts your focus on what is the market supposed to be doing, and how good of a job is it doing that. That is another level of trading, guys. Hope this has been helpful. I think I addressed all of the questions. There was one more question about ads, and I want to address that. So in simple terms, let's say that you get long down here. I don't care why, but you get long down here. When the market moves 1 VF, that stop's now going to come to break even. Okay. Then if you have an opportunity to add using the volume trend, or maybe an SD, or maybe a combination of both, as long as we're not trying to buy in the offer zone, then you're going to get a new stop for that new position. That is now where your full stop for the position is. So you're going to combine those on the new stop, and then you can't touch it until the market moves 1 VF in your favor again. So let's say we get an add here, and up here is where that break even move comes in. All of my stops are going to go to the new entry. And now once I've had a break even, now I can either manage that and continue moving the stop up, both of them all combined, or I can add on again if I get to the other side of the offer zone. And if I add on again, that new position, the entire position has to have one VF from the new place. So it's not a process of trying to manage multiple stops and you've got 3 all over the place, and it's just all it's going to do is get in your way. So the idea is that anytime we put on a new ad, we're going to give the entire position that new 1 VF of stop. Hopefully that makes sense. If you've got more questions, hit me up. I love doing this, and we'll see what happens in the morning, right? It'll be interesting. I'll fire up and show you guys in the pre-market where we are, because I have no idea. The market's closed. Anyway, hopefully this is helpful.